What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit the subscribe button, thumbs up button, notification bell, all the things. Good stuff. Thank you for coming today. Welcome. Happy Thursday. We're talking about making good decisions in the crypto world. Today we're talking about Bitcoin and its wild price action. We're going to talk about altcoins, and specifically I want to talk about altcoins as it relates to some of the things we talked about earlier this week. And I want to talk about how there can be cognitive bias built into things that happen with the altcoin market. And I'll explain what I mean by that. And then I want to talk a little bit about some things that are happening in the news, but really not the news itself, what it means, but the process of the news. I'll explain what I mean and just go through that. And we'll talk about a little bit about price targets, which we'll talk about right now. So let's get into it. Bitcoin. So as we were talking yesterday, we talked about a few different things. So the first is that when it ramped up to this high of, let's call it 9,750, 9,800, clear bubble-ish feelings. And obviously, I sold my trading position, which was a combination of experience, but also a combination of just timing it really. Luckily, that was luck. The price is luck, but the execution was pretty strategic in many ways. And then we talked about it coming down, and I was like, all right, I'm going to buy in at the top of this, support zone. So if anybody's listening, or if you've seen these YouTube videos, there's a couple boxes here. The first box is the one that is really the big support, right around 9,000 is the top. And then we went up to 9,500 to 98 is the next box above. We obviously popped into the top box, the red box, I should say, came down to the white box, which is the neutral zone. And we had a bit of a reversal. So what happened, as I mentioned in yesterday's video, I bought in. I waited for a bit of confirmation. You saw this bullish engulfing on the 1 hour. And so I put in some bids at 89.50. And what happened was it went up, it came down, it retested this top line of the box right around 89.50, and then it shot up. So for all intents and purposes, that looked like an awesome reversal trade, which are always... That's typically how you lose all your money in trading, is when you try to time reversals. Just as one thing that, as they say, there's a great saying. It's like you don't want to learn from your own mistakes. You want to learn from other people's mistakes. That's typically a better way to do it. And so when I studied a lot of traders, that's one of the biggest takeaways. They're like, don't try to time reversals. And so this case... obviously, I didn't take their advice, but I tried to do the reversal. But as a risk mitigator, I put a very, very tight stop loss on there, right around 8,900, so that if it did go down below that, I was out. I didn't lose. I mean, I lost a tiny bit of money. I think I even broke even with including fees. And that gets into the idea when you are going to place a trade. If you're a trader, if you're not, this really also comes down to investment to a certain extent. The first rule that you go into everything with, first rule, I got to preserve my capital. In crypto, that's like operational security, making sure everything is set, all your passwords, two-factor authentication, your hardware wallets are stored in secure locations. That's all, that's like the foundation. The second is I got to protect my capital. And so in the market, when you lay down a trade, you want to have a protective stop. Sometimes it can be very tight, like in this case, if you're being very aggressive, or it can be like an exit target that can be more loose. It can be more like 10% or whatever you want to do, depending on how you're playing it. And then the third is, okay, now I want to make money. And you got to go in that sequence if you want to consistently generate profits. So in this case, put it in order at 89.50. It went up. I took a tiny bit of profits here, and then it came back down, and then my stop loss hit. So the profits and the stop loss basically negated out. And then it came down here, and now it's bouncing around in this zone. And there's obviously more potential opportunities. You're seeing a lot of these kind of volume spikes, which often preclude a bit of a run. So if you're like a very aggressive day trader, you can potentially scalp some of this profit, especially if you're using margin trading or leverage or something. But this is where, this is not my thing, right? This is how people lose a lot of money, and this is just not a good risk reward. So I'm sitting back and watching this. I took a shot here. I broke even, got out alive, but I'm happy with the trade I made over here and just going to watch this. So now the next question, obviously, is what's going to happen next? And again, for anybody, like this is, I think, hopefully this is obvious by now. But I think one of the frustrating things, if you're not used to technical analysis or if you're not used to trading mentality, you can look at people who have charts and they're like, well, it could either go up or it could go down, but we don't really know. And that can be really frustrating. But remember, this is all about probabilities. So it's kind of like saying there's a 67% chance that this could happen. Do you take it or do you not? Well, that's up to you. And so no one's going to say it's either 100% or 0%. It's always a sliding scale. And that's the way you always want to approach it. So when we're looking at the 1 hour and we see this price action come down, it looks like there's obviously a pretty severe sell-off, stairs up, elevator down. And you could make a case for some semblance of, it's holding support at this. But when we go out to the daily chart, this is when it gets a little bit less exciting because we have here, starting at this 9,800 level, the peak, what's called a bearish engulfing candle. That means that this candle is bigger than the candle before it. Now I'm still using the colors because when I use the black and white stuff, people just tend to get confused. So it's easier to use the red and green for now, but I would encourage people to eventually get to using black and white or even just all white candles to remove bias. But when you get a bigger candle, this is a bearish pattern on the daily chart. And you can see we're getting another candle. And theoretically, this is showing a bearish reversal. So the overall trend within this time frame, call it the last 2 weeks, we are showing a reversal, a bearish pattern. Meaning any sort of bounces that we get, technically speaking, should be short-lived, which is kind of what we're seeing already. And then if you go to let's go to the 4 hour just to make it a little bit easier to see, you start to look at potential targets, right? Buy-in targets or whatever you want to call it. And we've got this green box down below, which is representative of the previous resistance level. So as we know, resistance becomes support. So from a technical standpoint, you could maybe make a case for this 8,300. There's going to be, or 84, 8,300 area. There's going to be some support there because there's previous resistance. But then you get down into this box, which is, at least on Bitfinex, 78, I don't know, let's call it 78.80 up to 81.20. This box, because there is so much previous resistance, this is the first big support level. So if you were going to wait to make an entry, this would be your first target of where it might bounce. The second target, let me get a rectangle here, would be down. Let me get this. Whoops. Delete that. I'm just trying to get this chart so it's easier to see for you guys. Would be down here. So you see where this other resistance level was, which would become a support level, which starts around 7,500, and you can draw it pretty much, I would say, down to about here, which would be about 7,000. Now I know that looks like a very big area, a big box, but this is a pretty wide zone down here. So this would be your second level of potential support. So this would be the first. So if you were going to trade this, what you would do is you would set some bids in here, and then you'd set stop losses, maybe not right below it because there's probably going to be a handful of wicks You see how there's always these wicks on these reversals because people try to clear out the stop losses. So if you're going to try to do the reversal, you want to set your stops pretty low so that you don't get stopped out and then it bounces back up. The smarter strategy, the higher probability strategy, is you wait for it to confirm over the box. It confirms, it gets support on the box, and then it starts going up, and you buy in as soon as it launches off that retest. So that's the first place. But if this fails, then you go down to this box. Again, I know this is a wide range, but that's just what the chart says. And so you kind of, you do the same process within this area. If that one fails, then you're getting down to the bottom here, which is when we get into, let me just move this up so I can see, the 6,400 down to the 6,000, which is the previous bottom, which is really the last whatever last frontier here, the last stand. If we go below that, yeah, well, we'll cross that bridge when we get to it. The other thing you can look at, if you wanted to, is our good friend Fibonacci, which we haven't really looked at in a while. And I'm going to do it from the bottom here, this 60. Man, freaking face is really getting in the way here. Let me move this over. If you do the Fibonacci from the 64, right, the recent low, because that's kind of the lowest low in this run. We start there, you go up to the top of this wick. You can start to see how these levels have matched a lot of this resistance as well. And so you can also see that this is probably going to show some support. So within these zones, you can get a sense of what the technicals might say. So it might be at the lower end of this support zone, would be the 78 retracement. That's going to be a very, very strong support level, loosely speaking. And maybe at the top of this next green box at 8,000 or so. So again, none of this is 100% true. This is all probabilities. So what am I going to do? Again, none of this professional advice. You got to do your own research. Hopefully this helps you make better decisions. That's really what this channel is all about anyway. What I'm going to do is I'm going to sit back and wait. I'm going to wait for this to come down in this box based on the previous activity. This is probably going to bounce around for a while. I don't think it's going to just come down and bounce off of it. If it does, so be it. I'm not going to try to catch that reversal. I want to see it confirm and start to go up before I buy back in with a lot of volume, because we're going to need it to get through these next few areas up into this bullish zone. But I'm not really interested in trying to catch these reversals at this point. If we get down to this level, this 7,500 down to 7,100, I'd probably get more interested in a reversal, because the lower you go, the higher your chances of it bouncing are. And, we'll go from there. But again, keeping tight stop losses, doing all that sort of thing. And that's how it looks right now. I think that this is probably the most likely scenario. Again, the deeper it goes, the higher the probability of it bouncing. And so less aggressive on the first box, more aggressive on the second box, very aggressive on the third box. If it doesn't hold the third box, well, whatever. We'll see what happens. Okay, so that's Bitcoin. I'm talking about Bitcoin mostly because it consistently has shown how the rest of the market works. Ethereum, Litecoin, all that's going to mirror what Bitcoin does for the most part. Now let's go over to coinmarketcap.com. I don't know why I said that so slow. 395 billion market cap. We're kind of fluctuating. I think we went up to 430 when we were at 9,800. Now we're down to 395. Obviously that moves in relation to Bitcoin. And we switch it over to BTC valuations. It's kind of what we always do to make sure that we're trading against Bitcoin, not against US dollars. We're seeing a pretty good amount of green action, right? Prices increasing against Bitcoin. Now you can see in the charts that this is a 24-hour price action, so you can see that it's still absorbing a lot of the earlier gains. It's not taking into account the most recent gains. But a few things to note, and this is when we get into what I just mentioned. First of all, Siacoin. I used to call it Siacoin. I believe it's called Siacoin, S-I-A coin, whatever. Do you remember on, what was it, Monday, I think we talked about Amazon Web Services. And this is this is a really important piece of the puzzle as you are creating your investment thesis and or decisions. So Siacoin went up 30% in the last 24 hours against Bitcoin. In some trains of thought, it can be very easy. Especially like, let's say you watch this channel and you don't watch other channels, or no one else has been talking about Siacoin all week. I mentioned it on Monday as, okay, Amazon Web Services is coming out. If they prove that that model works, it's going to lead the way for other distributed storage coins, Siacoin, Filecoin, etc. 3 days later, Siacoin goes up 30%. It's easy to make the connection or the conclusion that this was because of that Amazon Web Services news, right? Our information input maybe is incomplete. It's always incomplete. And therefore, our decision and conclusion process is going to be incomplete. I have not looked into what drove this. You rarely know exactly the full scope of what drove this, but I think it's really important. Yes, the Amazon thing may have been a part of it, but what you always want to do before you make those sort of conclusions is you want to go dig in, go look at the news cycle, go look at Twitter, go ask around, go find out as much as you can to make sure that you can draw conclusions that are not just correlations. And so I think that that is something that's super critical, because I know for myself, I saw this jump and my first reaction was, oh, the Amazon thing, because that's the last thing I thought of when it came to Siacoin. But in reality, I have no idea. I would have to go do my research and check it out and all that. So I would encourage the same thing. When you're looking through the coins, and whether you own them or you don't own them, and you see something go big, our first reaction is always, what's the most recent piece of news, or what's the thing that we remember most about that particular coin? And we could easily attribute the growth to that thing, when in reality it can be completely different, right? The same thing with Omise Go, right? We talked about that. That was one of the coins that I've been looking at, like EOS, Omise Go, Binance Coin. Good week for all those coins, but I think it's a good week for everything, which is kind of true anytime you have a bull market. Like, everything you put out tends to do well, and then you think that you know what you're talking about, and I think that that's very dangerous. So glad it worked out. I believe in all those coins, but at the same time, it's also like you gotta really dig in and see why. Now, Omise Go was not because it was on Coin Mastery. I wish it was, but it's because it got listed on some big exchanges. Right, they're doing a lot of new marketing initiatives. It's also just a great product. It's been a long time coming. You could see it in the charts, the cup and handle and everything. They're having a breakout. The other thing to notice. I have a monitor over here, like a vertical monitor, and I've got, let's say, 15 charts on it. And what's really interesting is when you watch Bitcoin's movement in real time, and you watch a handful of your favorite altcoins, see which ones are most impacted by Bitcoin's movement. And the ones that are fluctuating with Bitcoin typically don't have some imminent thing about to happen. But the ones that stay pretty flat, even in the face of volatility in Bitcoin, tend to be ones that have something coming pretty soon. This is by no means a true science at all. But think about the psychology, right? If you were an OMG holder, Omise Go holder, and you knew that it was going to be listed on exchange, whatever. Even if you saw Bitcoin doing this, you wouldn't sell your OMG because you knew that in the next couple of days it was going to go big. So that can change the volatility factor of some of these coins. That's why we talk about as Bitcoin's going down, it's often better to buy into the ones that are holding steady, because that's usually a sign of both quality and, some people are holding and or buying in the face of a downturn, which is always a good sign, short term and long term. So keeping that all in mind, I think is super important. And then there was one other I was going to pull up, but I can't remember exactly what it was. Anyway, I think that's probably the big story is Scicoin, as it relates to whatever news. And I'm saying, this is just because this is something that's been on my mind, and that was my first reaction. And I think it's important to, always be outsourcing yourself, always be thinking, how am I wrong? What am I not realizing? What does somebody else know that I don't know? Things like that. Now, a couple pieces of news. First, Deutsche Bank, if you guys don't know, it's one of the biggest investment banks in the world. They just announced that they are they fired, I should say, 300 US-based investment bankers. Now, I tweeted about this kind of tongue-in-cheek, and I said, hey, this is what happens when you go head-to-head with Binance, like the CEO of Binance. I don't mean that they're actually like competing, like Deutsche Bank, and it's different. It's more like Binance releases some information that they're doing, I believe, $200 million a quarter. Maybe, is that right? They have 200 employees. Either way, $180 million a quarter or something. Either way, their earnings crushed Deutsche Bank. Now, think about that. Deutsche Bank is one of the biggest banks in the world. They're doing massive money, like huge amounts of money. And Binance, small, relative, it's huge in the crypto world, but small, in the grand scheme of things, is making more profit than Deutsche Bank. That is and that's like real money too. I mean, that's fiat because they have their own token and like there's a exchangeable value of that. It's a liquid thing. That's a big deal. Now, I don't know, we got to dig into what exactly drove these 300 investment bankers to get fired. If you're following Forex at all, foreign exchange currencies, you know that the euro had their interest rates today, got crushed against the US dollar. The US dollar is doing really well right now, or it's on a bull run, I should say. So from a global standpoint, from a macro standpoint, that has a piece of it, but also just the revenue models of these banks. There's, the expression just like searching for yield. That's not really an expression, but that's like that's what these banks do. Like that's what investment banks, that's what money managers, that's what market makers, that's what they all are constantly trying to do, is search for yield. And in the banking world, in the investment world, especially on the macro scale, which is really how every bank, anyone who's got 100, 200 million, like you kind of have to do macro trading. That's the only way you can move that kind of money. They're looking for yield, and it's very hard to find right now in anything that isn't, because volatility is relatively low globally across all asset classes right now. And so that's causing a lot of these banks to have a hard time finding returns anywhere. And we can get into a different discussion about that, like why people are shorting the VIX to create volatility in currency exchange. I think we're going to see more volatility in the next year or two. But crypto is proving that it can be very profitable, at least Binance, this one-to-one thing. Again, this is not a long-term trend as much as this is just an insight into like how we can affect the greater banking world, political world, right? You got to hit them in the wallet. The idea of decentralization and being your own bank, that's all cool. Like that's great. I believe all that. I'm into it. But if you really want to make a difference in this world, especially in the geopolitical economy, it has to be about money. Not saying I agree with it or like that I like that, but that's the truth, is that everything comes back to money and religion in the world. Like that's what drives everything. So this is a big deal. And then while, like I said, there's no direct correlation, but it's not a coincidence. Like, they're talking about this. They're not idiots. Now, there's a few things I wanted to bring up, and the headlines that helped with this. So BBVA, I believe, was a Spanish bank, I believe, a huge bank, issues $91 million loan using 2 blockchains. Okay, so great. Like, interesting use case of blockchain. Doesn't really matter about the details. The other news article along the same lines, IBM partners with the jewelry industry on Hyperledger supply chain project. So IBM has Hyperledger Fabric, which is not really an oracle. It's more of like it's a way to do off-chain, like data feed type of stuff where it just processes data much faster, allows you to do real-time data exchange. It's a connector of data within the blockchain space, right? They're trying to do Oracle, but it's not quite there. It doesn't actually switch the data like a DEX would. So anyway, some people are going to look at this and they're going to think, oh, this is cool. Like, they're issuing loans. Maybe I'll go buy Salt coins. IBM issues this. Oh, that's cool. Maybe I'll go buy some more Stellar, or look into supply chain technologies like VeChain or whatever it may be, or if there's something into the jewelry industry, I don't know. Like, articles, and then the conclusion is, what coin do I go buy, right? That's what a lot of people do. And sometimes that's right. But I think the bigger story here is something that I've seen happen in other industries, and I think we are going to see this happen. We are seeing this happen in crypto, which is often we wait for some singular event to happen where we can then say that, okay, big money is here. Institutional money is here. Companies are using crypto now, right? It's like, oh, Soros is in. Big money's trading now. We're waiting for someone, like some singular news event, right? When in reality, it actually ends up happening much more organically. You see articles like this, like, oh, this bank is doing a $91 million loan. Oh, IBM's like testing out the diamond market with supply side stuff. But it doesn't actually impact, there's no huge thing that happens on the price scale. It just expands the actual market. The reach changes. And then there's all this development and all these new projects and things happen. And that is really like how this growth goes down, is it's all kind of these small things that start to compound. And yes, you get these one-off events here and there, the headlines and stuff like that will impact the price of the market. But right now we have a very big disparity between the prices and then the actual building of the blockchain distributed ledger technology space. And that's the problem. Not even a problem. That's almost, I would say, the opportunity, is seeing where the true innovation is happening and not getting caught up in the price. Obviously, the price is the fun part, or for most people, I think it's the fun part. It's where the action is. Watching these sort of macro trends happening, or these core business trends happening, is in many ways, it's hard to take action on it, right? It's hard to do anything about this because you can't invest in this. But what you can do is you can start to become very well versed in this technology. You can see where these trends are going. You can start to make bigger bets on the macro trends that are happening and follow that sort of thing, which will eventually potentially lead into some sort of token on the exchange. And that's one of the reasons why macro investing is typically not appealing to people who are just looking for, hey, what's the coin? When's it going up? What's the pump? I need to make some money. Macro doesn't necessarily appeal to a lot of that because it's not black and white. It's more of this kind of stuff where you see the trends happening and you need to connect the dots. But when you do connect the dots, you can get a 6-month head start on people so that you can accumulate stuff that has no news now, but it may in the future. And that's really the way that, you start to look at these news articles and see it happening. But it's happening. The market's being built. The companies are doing it. They're building this stuff. The money's coming in. It's just that we don't see it on the price yet. And the more you can separate those two and dedicate just as much time to both, in my opinion, the better off as an investor you'll be, and the more you will be able to make better decisions down the road. All right. So something to think about. Kind of an ongoing theme of this show is always how to take the bigger picture, connect the dots, make better decisions about it. Let's see. This next one about the 17 millionth Bitcoin, I think is an interesting idea about the supply and demand. But I think what I found really interesting about this is that I always think about what's the pitch, right? I always think about what's the meeting in the conference room for the people that are making decisions on this. Now, some of you, many of you, I would say, probably have interactions with your friends, with your family, with your coworkers, with your boss, whatever, where maybe you know a lot about blockchain and crypto, but other people don't. Very smart people that know a lot about other stuff, but they don't know anything about crypto. And I think about that all the time because that's how money moves in corporations. That's how big money decisions are made, is that it has to be pitched. It has to be sold to get over that belief system, right? That's part of that's how marketing and sales works. And so when I read an article like this on the logical side, or I should say on the economic thinker side, you look at this and you say, all right, well, we're running out of supply and it's going to affect mining, and what's the timeline look like, and the Bitcoin halving date, which I believe is in June of 2020, right? Which is, in my opinion, that's a very big deal. If you don't know what that is, it changes the reward for mining. You should look up how that works because that's a big deal on how the price is going to play out in the next couple of years, or next year and a half, I should say. So there's all that, right? There's all the mechanics of it. But then on the other side, you think to yourself, how is this being sold to somebody who runs a 5-person hedge fund, who wants to get into crypto? They read this article, maybe they don't even think about it, but what's the pitch? Who's pitching them? And the pitch may be, look, the supply's running out. This isn't gold. There's not going to be more mined every year forever. This is going to run out. There's a scarcity component, and this sort of thing can create the urgency of that decision. Anytime a decision is made out of that scarcity mentality, you often see this kind of price action. So if you look at the Bitcoin chart, obviously 4 hours not the best, but let's look at the 5-minute. Let's go back to the auto here. You look at the 5-minute and you can see, it's kind of hard to see. Actually, over here, let's look, right? On the 23rd. I'm not saying that this is what happened, but in 5 minutes, call it $50 million worth of Bitcoin was purchased, right? These kind of decisions or these kind of stories, hey, look, Bitcoin's running out, the scarcity model's coming. That plays a big factor in managers, traders, people at the private equity fund world. That's how they often make decisions like that. I know plenty of people who work at these companies, they get FOMO just as much as everybody else, right? In fact, I would say they often get it more, right? Because their jobs depend on them capitalizing on trends. And so I think that, yes, this affects the economics of it in some capacity, but the pitch, the story is why this is really helpful. And I'm not saying you should or should not go out and use this as ammunition or incentive for people to get into crypto. But I do think that this is the kind of story that, if you have a friend who works at a bank, this is a very good story to send them, because this is a very compelling story for big money to get in. the supply is running out. You should just buy some now because it's not going to change. And so thinking about that, right? Thinking about the human side of it, thinking about the act, like how does it really play out with individual people, is always a really good. It's just always a very powerful message to do it, and that's how we can accelerate the growth of this on the price standpoint. It's not much we necessarily can do about IBM putting the jewelry on the blockchain. I mean, unless you work for IBM or whatever. But this kind of story we can do, because this is the kind of article that you can send to somebody, whether it's someone you want to get in for someone who wants to buy $100 of Bitcoin, someone who wants to buy $10 million worth of Bitcoin. This is a very, very good and compelling story from a marketing standpoint, I would say. Now, lastly, Bitcoin is a scam, claims ousted CEO of PayPal. I think that this goes without saying, but I will say it. The people that are threatened most by incumbent technologies are the ones that are going to be the biggest critics. I don't think that comes as a surprise, as we saw last year with Jamie Dimon and everyone, kind of the whole list of China and everything. PayPal has a lot to lose. Venmo has a lot to lose. Apple Pay to a certain extent has a lot to lose if this comes in and cannot supplement their technology. So PayPal may believe in blockchain, and they may believe in PayPal coin, if they ever made that. I don't know if they're going to. But the worst thing that can happen to PayPal is people start using Bitcoin or Litecoin or whatever to send money to each other, to actually do transactions, especially as things like Lightning Network and fees come down. It becomes a real threat. So for them, they don't want a replacement to survive. They do want blockchain technology to survive so that they can stay on top. And this is a good situation where you can watch these sort of things unfold. But the proxy is that the more of this you see, the more that you know that they are doing something about it, right? For example, with the Deutsche Bank thing, they fired 300 people in the US. Obviously, I'm not saying that crypto is the reason this happened, but they don't just wake up and say, hey, 300 people are going to get the can today. That's tough. That's a huge deal. I mean, 300 US-based investment bankers, that's like a couple $100 million in salary with bonuses and all that, right? That's a decision that the management has been making for months and months and months. Similarly, at PayPal, even though this guy may not be still working at PayPal, I'm sure he still has plenty of stock or ownership in eBay and PayPal or whatever. Like, he is incentivized for PayPal to continue to win and for his own reputation to not be completely decimated. You better believe that on the side, he's actively trying to figure out a solution of how they can stay, of how anybody can stay on top as this unfolds. So I always find that this is a very good proxy. It's kind of like contrarian investing, right? The more you see companies saying something is garbage, the more you know that they are on the verge of trying to release their own alternative. It's a very contrarian thing to think about. That's why CNBC is a very good contraindicator in many ways of like, here's what the news is, like, here's what's happening right now, when in reality, that's actually what happened a month ago. We're just reporting it now. And this is nothing new, but I think it's just always important to keep thinking about this, because we are looking, price is just such a kind of fickle and unique thing. And we're obviously only looking at Bitcoin just because it's a proxy of everything. But I can't stress this enough. The world is in it. They're building it all. We might not see it yet because we don't see the price. We don't see the coin. It's not directly in front of our faces, but it's all happening. And the best thing to do is to be prepared, be able to capitalize on opportunities as they come, whether that be having fiat, having Bitcoin, whatever it may be for, in your individual case, doing the research, connecting the dots so that you can start to, hopefully make better decisions and have a portfolio that does what you hope it to do. Okay. All right. So interesting stuff. I think there's so many topics I wish we could cover, but we'll do more tomorrow. I think one topic that I'm interested in covering, I'll make a note for tomorrow, is the decision behind trading. I think I did a poll the other day about how much does capital gains taxes for anybody who lives in a country with capital gains, the United States being one. Many countries don't have it, but many countries do. How does that play into how you make decisions? And I think there's a lot of confusion about that, or at least. And so what I want to do is actually put a spreadsheet out and show you what the real cost is, because I think it would surprise a lot of people when you actually do the math, which is always what you want to do whenever you're making any sort of financial decision. All right, guys, I hope you have a great day, and I'll see you tomorrow. All right, peace out.